Welcome back to the channel. We're going to do some altcoin analysis. We're going to go over Bitcoin. We're going to go over the Bitcoin all-time history index. We're going to go over a lot. It's going to be a long one today. But before we start, I just want to say thank you to everyone that's subscribed. We've only been doing this a couple of weeks now, and we've got over 500 subscribers, so I want to thank each and every one of you. So if you're not subscribed and you do like our content, give us a thumbs up, subscribe to the channel, hit the notification bell. Now let's get into the charts. So we'll start off, and I've got the Bitcoin all-time history index here, and what I wanted to do is we've got the 3-day chart up, and I just want to go through, and we'll go through and we'll add some support and resistance levels together on the charts and find out where price action is likely to go. But first of all, I wanted to go back to the start of Bitcoin and just show you guys exactly how previous highs and previous levels of resistance become flip support. So it's going to give us an overview as where's Bitcoin likely to go in the future overall, and that's what we're aiming for. So we'll get the toolbar up, and we'll see that that was the first top. In fact, that was the 2017 top. So we'll go back, we won't go back too far actually, we'll go back to 2017. So had 2017 top ranging and topping out at 19,728. So that ended on the 12th of December. Now let's measure the time of the market before we had the next all-time high, which was try again. So it was 1,092 days, pretty long time there. So that's an estimation of how long of crypto winter is. And you see, so you've had, this is the 2020-2021 bull run, and you see that we had a little bit of price action and resistance here, where we were going at the all-time high, and the reason for that is because people that were buying the top roundabout here and roundabout here and roundabout here, if they didn't want to take a loss, they would have been putting sell orders to break even there if they didn't believe that the market was going to rally the same as what it did previous years. So you've got a little bit of confluence there, and that's going to act as strong support because that was the previous all-time high, and that's going to be the next major support for Bitcoin at the moment. So we're on, don't forget, the 3-day chart, and what we'll do is we'll just add some more support and resistance lines on there, and the way that I like to do that is by just changing to the line chart, and we can look and we can find out together how many sticking points there are for each area. So the way that you look for sticking points is how many times has price action stopped at this specific area. So you can see that you've got an area here, and we are going to mark this because it's an important level because that's the previous low, and if we get close below this low there, we'd be looking to test these lows down here, which is, as you know, is 21,000. So there's a possibility if we do drop past this level here, there's not much resistance points or areas of confluence of resistance and support being built up in these previous areas here, so the drop could be quite a huge drop. People think that Bitcoin is not going to go below 30,000, and I don't know if there's going to be many buy orders below 30,000 to push price action back up, so potentially you could have that capitulation, but we're just going to have to wait and see really at the moment. So we'll carry on drawing our lines of resistance at the moment. So you've got 1 touch, 2 touch, 3 touch, and then it flipped support, and then it's going to go resistance again. So we've got an area there, add some more areas in. So we're just looking for the sticking points. Area there, and probably pull that back down because we had an area of confluence more recently here, so it acted as a resistance there. So chances are if we put the candle chart back on, there'll be a spike up here as well. So yeah, you've got your spike going straight past there, and it's been pushed back down by the candle close. So that's the power of having the line chart, is because it misses out all the noise of the candle extreme high and low, which is represented by the wick. So we'll just add a couple of areas on here, although that it's unlikely we're going to get back to these areas in the near future. We'll have them in anyway regardless. A few touches there, you can see that we've got the one touch there, resistance, support, resistance, support, and then we've broke through, and we'll see if it tests to come back as resistance then before we go back down. So there's probably another level here as well, which is the more recent. So we've got our lines on there. We'll go back to the candle chart and get a reading of what the candles are telling us. So we've had, this is the 3-day, so we've had 1, 2, 3, 4 bear candles. We had, that's really, although it was a green candle, it signaled higher. It's pushed straight back up to the body, at the top of the body of this candle, and then the bears have managed to push it back down. So it is a bearish candle overall, even though it is green. And then we've done the same here. Price action is pushed back up to hit the 200 3-day moving average, and then the bears, the sellers, have pushed back down from there. So you would have had a lot of sell orders here, and it would have added additional confluence, which we've put our line of resistance there. So we've got a line of resistance there, and we've also got the 200 moving average, so we've got double confluence there. So you're likely to get an additional reaction from this level before price action reacts and comes back down. So this is the level we needed to hold next, which was the 36,000, and we've slammed straight through the 36,000, and we've at the bottom of this candle there is represented 33,000. 33,000 we've hit. That was today, I think. If we go back on the daily, we can have a look. So yeah, 33,000 today, and it's not looking too great. So next level of support, like we say, was the 29,500, possibly 30,000 psychological number for lots of buy orders at that level. But we've got a lot more upside to come on here. So we've had in this, we've been talking about this upward range quite a lot on the channel, and we've been saying how bearish this upward range is when it's come from a downwards move. So we've come from the downwards move, we're trading an upwards range. This is a complex pullback where you've made a high, you've made another high, and the price action is continuing down now. So you've had a negative reaction from these levels here. So that's Bitcoin. Like I say, we've had two capitulations. I'll just go quickly over. So we've had the two capitulations here, capitulation, capitulation. And what this indicates when you get these levels here is that indicates that there's lots of buy-in. There's lots of buy orders there, there's lots of buy-in action there. And the bears have been trying to push it down to these levels, but they haven't managed to. And it's been reacted by a strong bullish move here, where we've had these strong candles on the upside. We've come back down to retest this level there, which was represented by the wedge that we were in here. To come back down, you've got your second capitulation wick, and we were talking about whether we were going to get that third capitulation wick, because this didn't seem too much to us. And when you're trading in an upwards range and you've got all these levels of resistance to get through following the downward move, and you've got like negative events that are happening in the market, such as geopolitical events, such as the war that's happening in Ukraine, hyperinflation, and people are having a tough time at the moment. So there's all sorts of bad things happening, which doesn't let the market run, unfortunately. And we knew at this point here that this wasn't the capitulation wick that was pushing the price action back up, and we were expecting further downside on there. So we also had the Fed meeting, which we had this huge rally up on the Fed meeting, and that hit this level of resistance pretty much dead on, a little bit less, and it's come back down, and we're testing back these levels here now. So whether we're going to come back up and manage to break through here, or come back down and test these levels again, you possibly get a double bottom here, and the bulls could have a try and see if we can push price action back up. But it's going to be strong to get past the 40,000 level again, in my opinion, and you're more likely to see downwards action, so downwards move back down to the 30,000 level, in my opinion. So that's Bitcoin. We'll have a couple of look at some others. Let's have a look at Ethereum first. Similar to Bitcoin, you've been trading in the range, been making lower highs, lower lows, lower highs, lower lows, and then you get to an indecision point here where we either reacted or we were going to continue to a more downwards move. So we had previous support here, which is a lot of trading actions happened here, so we had a lot of buying action and selling action, so there's a lot of support at these levels. And similar to Bitcoin, we were in this wedge, we had the two capitulations, and then we fell out. It's not bleeding as much as what Bitcoin is, but the range of the wedge is a lot larger. So I mean, you're looking at the range of this wedge here, you were looking at 3.6 recently, the top of the wedge, and 2.6, so about 25% range, so massive really. We're getting a reaction from the bulls. If we have a quick look in the 4 hour, back off and get rid of the have a quick look at the 4 hour, see if we can get any indication of when price action is likely to go next. We've had this huge move to the downside. Best case scenario, in my opinion. So best case scenario, in my opinion, is we've got to come back and we've got to retest. So let's have a quick look at the, bring the one of the hour indicators up. I mean, we'll have a look at the RSI first. RSI is at 25, so this is the 4 hour. RSI is at 25, and you've got a bit of a bullish diversion here. And the shorter term, your price action on the relative strength indexes is pushing slightly upwards, and the chart action is pushing downwards. So we could see some likely shorter term bullish move, but I think that the bullish move is going to probably push us back up to these levels here to test this range between the previous swing high and the previous swing low, which would be our new zone of interest now. And what I'll be looking for on Ethereum is how it reacts at this zone of interest here. So you're going to get a positive reaction or you're going to get a negative reaction. If we're going to get a positive reaction, we need the move to push straight up and close above this level here to be able to have any kind of bullish move and any kind of reversal signal to try and get past these levels again. So it's not looking likely. What you probably see is going to happen is we know that we're in a downtrend. We've been in a downtrend for such a long time now. Bit of a complex pullback here, and we've made further down moves. So we are in a downtrend. Unless you're a counter trend trader, you don't want to be touching this. As far as investment's concerned, if we're trying to get to higher levels, we'd be looking at how we're going to act with this zone of interest here, whether we're going to get double top of this area and continue at levels down. That's a possibility, or a high probability. You might even get higher than that and test this trend line that we've been in for such a long time. But this trend line started back 4th of April, in the downwards trend, so quite a while now. Right, we'll have a quick look at AVAX next. Right, we said we were likely to move downwards to this equal measured move here, so we had this big move here, A to B leg, B to C leg, C to D leg, and that's literally played out perfectly. But as far as price action is concerned, it doesn't mean that we're going to reverse at this level. It just means that this is a level of resistance that we need to see if price is actually going to hold now. So we've just broken out of this range. We need to come back and test whether we can get back into this range or not. If we're going to start seeing a little bit of negative action from Bitcoin over the next coming days, we're probably looking at testing this level here, and if we can't hold this level down here, we would be looking at breaking, and this will be what was previous support becomes resistance. So you'll be looking at coming back and testing this level here and continuing down to the 44 levels, 45 levels. So we'll have to see that. Like I say, that's the 4 hour. We've got a little bit of bullish action at this level here, and we're just going to be observers, like I say, unless you're shorting or you're counter trend. If you're shorting the market, you'll be looking at how the market's going to react at this level. So is it going to go and push right back to where the previous swing high was, or is it going to get as far as the swing low was, the previous swing low was, which would indicate a strong downtrend? That would indicate that we've got a bit of bullish action, and it's going to be testing the highs of this level and continue the trend down. If it managed to go higher, it would indicate real strong bullish action, and the chances are we could start seeing some kind of a reversal pattern. So it's dependent on what price action's telling us at any given time, really, and that's why most of the time we're just observers in the market. Have a look at FTM next. Still holding. It's completely bled. It's holding these levels here. Next level of support, if it breaks this level, is going to be the 43 cents. And if we just follow the trend down here on Phantom, we see it had the 2 runs. November, and then it had its second run at the start of the year. So it had its 2 runs, and it had its big run last year as well, which doesn't look that big now in comparison. And if we just follow the trend down on Phantom, we'll see we were traded there 350, here 340, down to 179, down to 133, bounce to 164, down to $1.05, bounce to $1.60. What a massive range that is. And then look what we're doing here. So you've made a bottom, and this is what you look for a bullish reaction here in a trend reversal. We're not going to be trading this as a trend reversal because we actually have to see a confirmation that we're going to get a close above the previous swing high as a confirmation as some kind of a trend reversal first. But the first thing that we'd be looking for is for the market to do some kind of a bottom-in signal, such as a double bottom. So we've tested here. Bulls have managed to push price action back up to the 166 level. We've come back down, we've tested this level again positively. Bulls have pushed back up, tested again for the 3rd time. Bulls have pushed back up, and we've slammed straight down. So if you imagine it as all sorts of different analogies, the ice analogy, if you're walking on ice, it's going to get weaker and weaker and weaker, and you're just going to slam straight through eventually. So that's one thing that you can learn from patterns, such as if you've got a triangle pattern, a flag pattern, a pennant, for example. You're trading like this. Price action, if we're trading in a range like this, is more likely to go from the downside, specifically if it's following a down move or the reversal for the upside, because these levels here with this momentum line, it's different levels, and people have this drawn differently, whereas this line of support here, everybody knows where the line of support is, and it's bouncing and it's bouncing and it's bouncing and it's bouncing, and it's hitting this level all the time, eating up all the buy orders, negative reaction, eating up the buy orders, negative reaction, eating up the buy orders, and when it gets to the end, you've eaten up most of the buy orders, and the only way to go is to the downside. So that's the reason why the higher probability was of this coming down, unfortunately. So we'll do exactly the same again, and this is what I wanted to show you. The point that I was trying to make was we've hit this 3 times, we've come back up, we've slammed down, and we've got the same kind of reaction at these levels here. Come back and we're testing it. So we're currently testing it now. And have we had a strong bullish reaction? Not really. Got a little green candle here, which signaled by indecision, and that's just basically because the market's waiting to see what Bitcoin's going to do. Bitcoin's bleeding at the moment. One thing that we have got is a little bit of a bullish divergence there. Well, it's not really a bullish divergence. Price action is just sloping up slightly, but it's certainly sloping upwards more on the RSI, so it's signaling that there's a lot of buying power at this level, more so than what the price is telling us. So what we're looking for in here now, got the RSI massively oversold. Let me just bring the stochastic up and see what that's saying as well. So we've just got the cross on the daily RSI on FTM, signaling downtrend. Let's see if we break that though. Let's see if we break and close below this level. We don't want to be breaking and closing below the level of 65 cents, otherwise we're likely to come back down and retest the areas of 43, which is an absolute bargain if you're dollar cost averaging in. If I was dollar cost averaging in within the strategy that we've been talking about on the channel, you would actually be dollar cost averaging at these levels. So you'd be small incremental amounts at these levels, hoping that the price is going to go down and we can bring our average down at these levels. So in our strategy, you'd be, just as an example, you'd be coming down at these levels, and you have to be a minimum of 50% from the all-time high, which means that you can never actually buy a high. You never have to buy a high if you've got a rule where you've got to be 50% below its all-time high. You'll never have to worry about FOMOing in at higher levels. We're just buying at levels of structure, strong structure support, below the 50% from all-time high level, and bringing our average down over a period of time in a bear market. So we'd be buying a small amount at this level. We wouldn't be buying at resistance. We don't buy at resistance, we buy at support. And then we've bought at this level, so we want to see how the market's going to react. And like I say, we know there's a high probability if it's testing, that we're going to see further downwards action. So a little bit of patience, and then entry 2 could be here. And again, we wouldn't be buying here. We've got our entry at this level here, unless you don't manage to get the buy order, because price action is being pushed back up at such a high pace. You can come down and get that filled again here. But if you do manage to get your order filled, then we'll wait in to see if we can bring our average down here again. So this is a good thing for us with our strategy. But it has bled a lot. and we are at low levels on Phantom, so it's whether you can get it any cheaper than that. I mean, if we have a quick look on the weekly, yeah, 43 cents is huge support. Let's have a look at Solana next. Go back on the daily. No, on the 3-day actually. We'll have a quick look on the 3-day and then we'll go on the daily on Solana. Like we went through previously, and we added our support and resistance levels on this. And we spoke previously that we were likely to trade in this range for the simple reason. The simple reason is when we had the big massive run in Solana around here, we didn't get any time to build up any levels of support and resistance at this area to act as support at a later date, unfortunately. So it resulted in this, and you're likely to get a range in market from here. So levels that we need to hold. We're currently at one now, $75.61, and where we had the capitulation here, it's not an upward sloping channel, the same as Bitcoin, but we had the small capitulation wicks here, we had the strong bearish candle here, and now we've got bulls push back up to the level of this area here, trading down, come down, tested this level, reacted negatively, and we're at this level here now. So what we're likely to do is what we're likely to do actually is we've got the 3-day 200 moving average here, so we're likely to probably test that, get a reaction from that, and then come back and test these levels, and it's whether we can get a positive reaction from these levels and create some kind of reversal pattern like a head and shoulders, something like this, and we can come back and try and get a close above this level here, and then if we do get that close, then we'll be looking at levels of 136, which is quite a large range really. %43 range that. So that's what we're looking at on Solana. Next we've got Cardano. Right. Cardano previous high 4th of May, 7th of May 2018. In the earlier days, and similar to you mentioned Ethereum and Bitcoin, you've got the people that were buying in at these high levels here that needed to diversify it here so they didn't take a loss. They didn't believe in the project's actually slammed through, and if they'd have actually held on, they'd have all this upside, not to say that they didn't hold some of it. So let's have a quick look and build some levels in on here. So we'll just pop the line chart back on and see what levels are respected on Cardano. So we've got this major level we mentioned, it's the 38-cent level. Got a level at 85 cents, which was previous support, previous major support. It's likely to act as resistance now. to do. Right, okay. So we have got this here, which is similar to what we mentioned in Solana. Didn't have any chance to build up price action to act as support at a later date, so that's one thing to contend with. We're dropping to 38 cents as major levels of support, unfortunately, which was the previous high when I mentioned back in May 2018. And we've just got the close below there as well. Let me just bring the daily up and have a quick look. Right, okay, we actually haven't had a candle close below the previous low. $0.74. If we have a close below 74 cents, we're likely to go back down and test these levels at 38 cents, unfortunately. It's hard to believe, but there's no areas of support and resistance that's being built up at these levels here. Just straight shoot it up, and then the next level of resistance, support was here, and we just moved upwards, and we haven't seen these levels since. So it's quite worrying really for Cardano if it does go below this level. So it's the daily anyway, and we've got quite a lot of buying action here at the moment. So yeah, indicated by this green candle. So the level we want to close above is here, 80 cents. If we close above 80 cents, we can hopefully come back and test these levels here, which is just the 88 to the 90 cent level. Probably if we do test that, we're likely to get a reaction from the 200 4-hour moving average on here, and that's probably indicated by a moving average similar on the higher time frame as well of some sort. So Cardano, that's what we need to look out for. Have a look at near next, and got on the 3-day on near. It's been absolutely ripping this. We're technically in an uptrend on near. We're technically in an uptrend, but we're signalling some kind of a reversal at the moment. So if we just follow the trend up together, higher high, higher low, higher high. This has come back, but we haven't closed below the previous. So you've got a lower low below this here, but we're still continuing in an uptrend. So you've got your higher low, and then we haven't managed to create one here, a higher high. So we've got a lower high here and a higher low here. So that's signaling to us market hasn't been able to push up above this level here, and we've had a negative reaction, and that negative reaction's pushed the market down. .52%, so it doesn't look much, but that's 52% from its all-time high. It's absolutely slammed it down. So for it to come back now and try and create an all-time high, which it'd need to, it's got to go about 60%. And I don't think we've got the market for it to go 60%. So you've got weakness here, and we're at an area where we're testing now. And in my opinion, this has just signaled to us that this is a weakening trend, and we're likely to see lower price action here. So lower price action on near. If we bring the line chart up and add some levels on. where price action is likely to come down to. So it's looking like next resistance is $11.89, and next level of support's at $9.85. On near, we reacted to this level and we're getting a bit of bullish price action now, so bears have pushed that back down. It's hit back at these areas. This is the 3-day chart we're on now. Hit back at these areas and we've got a little capitulation wick there pushing price action up, and we're not towards the end of the 3 days yet, so we possibly see it testing back these levels here, see how we react and see if we can get above and continue higher, which is unlikely in my opinion. But we just have to see what price action tells us. Right, okay, so this is Phantom, sorry, it's FTX, and we're holding the 200 3-day moving average at the moment. So we're holding the 200 3-day moving average, and this is the level of support that we needed to hold that I mentioned previously, and we haven't. We've broke straight through there. We tested the 200 3-day moving average, and also this level of support here, or the zone of support which we previously mentioned, which indicated this capitulation wick previously back in the early start of back end of January. So if we fall below this moving average here, we're likely to fall below these levels here and come back and test the areas of $27 on FTT. And how much was FTT at its all-time high? $85. Hasn't done too bad compared to some of the other altcoins. Oh, our friend Algo, the one that we were looking at before, where we said that this level here has been respected from since August 2019, where we had the huge dump coming down here, come back, tested these levels, and we've been trading under these levels until we hit it here. Massive sell order. These levels, we've come back down, we've managed to break through, and then we've hit support, and then we mentioned, we were watching this in real time, that we managed to flip this, and we're trying to see whether it's going to act as resistance now on the higher time frame. So we've had a positive couple of candles where we've had negative reaction in the market, and we're currently testing, we're at this level now. We've broke above there, which is a strong signal that we have managed to break above there, but the main thing is we need to actually close above this level. So if we can get the big candle up here and manage to actually close at this level here, then we're likely to come back and test the 3-day 200 moving average on there. So it's one of the more positive ones, Algo, but it's not a trade, it's not an investment. If we were invested in Algo, we'd be investing at these levels here, but only incrementally, and waiting to see if we can get price action to come at lower levels. So that's Algorand. We'll have a look at a few more. Theta. So a bit of weakness in Theta. This is the huge level that we needed to hold, and we mentioned that if you're in a range here, we can use these as our accumulation points, and we can use these once we've got a confirmed range. This is too early to tell its confirmed range, but here, once we've got this negative reaction, we can start laddering 10% off and adding 10% in at lower levels again here. But we can see whether there's price actions reacting at these levels. So if we were buying in at 10% lower, we can buy it at 10% lower here, and even if the price action falls straight down there, we can still enter at these levels because we've got plenty of dry powder on the table, in line with our strategy that we've been showing you guys previously on the channel. So if you haven't watched the strategy on how to survive a bear market, how to make it big in a bear market, go back and watch it. It's in one of the playlists, and we're currently on episode 2. Episode 3 is shortly due to come out, and that's going to be showing you guys how you can add your own levels of support and resistance. Episode 4 will be how you can apply your own entry levels and how often, and episode 5 is going to be how you sell out and the strategy for selling out, and then we'll do a quick overview and we'll go through it all together in the 6th episode. So go and have a look at the playlist if you haven't watched it already, and put the notification bell on, and you'll be able to get episode 3 when it comes out in real time. But back to this is bearish action on Theta. We've got the close below here. Just got the close below this level. It's not to say that we could get price action pushed back up into this zone, which means that we haven't closed below this low here, which is always a possibility. And if that does, that's completely fine. We wouldn't have entered into anything. We shouldn't be entering in here anyway, because we're entering at our zones of support, and we mentioned previously our zones of support over here. And if this is going to act as resistance, we're not going to be entering at resistance. We're going to be waiting for price action to make a base and act as a new level of support. So that's Theta. Have a quick look at a couple more. Let's have a look at Gala. I haven't looked at this one for some time. These altcoins, these small cap alts bleed. Even though fundamentally Gala's got a lot going for it, and it absolutely had a huge run. Look how much it's completely bled. So this was September 21, which it was, the candle close was at 12 cents, and it ran all the way up to 84 cents, and look how quickly it come down. Let's get the measuring tool out. It's dropped 81% of its value in 65 days. So if you had $10,000 in Gala, you would have $1,400 left at these levels here. That's why the application of good risk management is so important with these things, with the small caps. Right, okay, so Aave. Aave on the 3-day, it's coming back and it's testing these levels. It's possibly going to test the $95. I'm pretty sure it probably will, to be honest with you. We did have a huge rally up here, which is quite unusual. So you've had the lower high, lower low. You've had the lower high, a bit of a complex pullback. Then you made the new low, you've come back, you've retested, you've made a new high, didn't manage to previously close below that, but you managed to push price action above this area, closed here, and then we've come back down and slammed straight down at these levels, and we're likely to test the 113 level, and I think that we're probably going to be going back and testing these previous levels here at 95 cents on Aave, which is cheap. It's more of a zone that we should be probably putting in here, something similar to that, and price actions, given the distance here, for it to have an equal measured move. Let's just have a look, see if this works. So you've got your A to B, B to C, and your C to D leg. So if you've got an equal measured move from here, your A to B, B to C, C to D leg comes, and it hits exactly to the dot to our support here of $96.10, and that's what I think will play out. So like I say, equal measured move. So if you measure that from the high of that candle to the low of the low, and then you just apply that to the high of that candle to the low, you could get a projection of where price action is likely to go if you do get that equal measured move. So patterns are harmonic, and you do tend to get equals of things, and you do tend to get things that will reverse, even each other out, and work in harmony with each other. So we're likely to come back and test these levels again, like I say, in Aave, and I think Aave is a good fundamental project, incrementally dollar cost and averaging at these levels here, and then these levels here, and waiting to see how price reacts at these levels, and if we can get it any cheaper, we can get it any cheaper, but fundamentally you need to do your research on the project first. Have a look at Luna next, and we've been waiting to get this cheap. I've been waiting to get this cheap for a long time, and I think we can get it even cheaper. It's done absolutely amazing. It's done fantastic in this bull run, Luna, and it's held its own when everything else has dumped. So Luna's bullish still, as far as long term's concerned, and the daily chart. We're creating a series of highs. It's managed to create a new high previously back in April. That's followed by higher lows. Got this capitulation that's happening in real time now, so it's on the daily. The price action's pulled Luna straight down below this momentum line, and it's not managing to close below it at the moment, signalled by buying action here. And fundamentally, a lot of people like Luna. They've got such a strong fan base, and they've got a lot going on in the community. So it's a lot of the money flows actually come into Luna. What I'd like to see on here to signal any kind of strength in the market would be a close below this 200 daily moving average. So if we can manage to get past here and get that close above this level here, possibly come back, retest that as support, and then we can try and test these levels here again. But I mean, it's unlikely at the moment while we've got negative price action happening with Bitcoin and everything else. Render, absolutely fantastic project, but small cap, high risk, and we've been trading in this range for some time, and we said we need to see how the price action is going to react and whether we do break out there and get some kind of positive price action. So what we wanted, but what we didn't get was we got the break, didn't get the break and close above this level. So if we got the break and close above this level and that come back and acted as support, we would have been able to try and go a little bit higher on render, but unfortunately we didn't. We broke out to the downside, come back, didn't even act as support this time, straight through, and then it's resistance, and now we're in resistance mode. So are we going to come back and test this level here, 132? We need to, really. We need to come back and test this level to see if it's going to act as a good support level. Because overall we are in a downtrend, price action's bearish, and the problem with this is we've never been at these levels, so where can it go? Who knows? We've got no levels whatsoever to go by. We've got could be there, 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 And the problem is with established tokens where you've got like Bitcoin, it's got a long history, it's got a lot of price action history, Ethereum's got a lot of price action history. We know when we can add in our levels of support and resistance, like I've previously shown you, and like I've shown you in the previous tutorials, we can add in those levels, and there's lots of people that are looking at those levels, and price action reacted to those levels previously. But if you imagine 100 people looking at a Bitcoin chart and 100 people out drawing levels of support and resistance, the chances are that a lot of those support and resistance levels would be in line with a Fibonacci, they'd be in line with the visible range VNPR, they'd be in line with zones of previous support and resistance, recent support and resistance, and you'll be able to build up confluence to try and give yourself an edge at where sticking point's going to be. So if you had those 100 people and they were putting in those zones, a lot of those 100 people would have the same zones and the same areas of support and resistance. Now, if you've got 100 people putting in zones where there's been no previous resistance or support, you're not going to have any two people, or it's going to be potluck if two people are going to put in the same levels. They don't know where it's going to be. The only thing that you can do is add a fib extension tool, and you can look at areas such as the 1236 and the 1618 and see if that's going to act as confluence. It's the only areas that you can use by using these kind of tools. So let's have a look. So when you're looking at the 1272, it's 15 cents. So that's how you if you were looking at the 1272, you're looking at 15 cents. And if you get render for 15 cents, then bloody hell. I mean, we know that it's a metaverse rendering tool, and it's one of the only ones that do it, and they're doing good. So you had on the first day that it was launched this massive bullish buying action here, and then it's just been in a downtrend ever since, hitting resistance, smashed down, and is this going to act as support? We don't know. So just something to keep an eye on now. If you're invested in Render and you believe in the project, dollar cost averaging to bring your average down isn't a bad shout at these levels, because overall if you think that it's something, if you think that it's a mistake that you've bought into a project, but you also think that project fundamentally is going to do quite well, if you bring your average down by buying at these levels here, so buying at these levels here, if you bought up here and you bought here, and you come down and you're buying at these levels here, and you're buying at these levels here, and you're buying at these levels here, ultimately if you want to get your money back, you could potentially end up with a sell order here and breaking even, because you bought lots of these levels here and some of these levels here, and if you wanted to get out the market because you didn't want to wait for a year or however long it's going to last, you can lower your average down, and that's your little get out clause there. Axie, oops, held this level for a while. We were ranging for a while in this channel here. Come back down, we're likely to come back, test this as resistance, what's going to happen in this area, and we'll probably end up, not that far, but we'll probably end up making new lows. So have a quick look where we are likely to move on that. Support there from that high. likely to see lower price action in Axie. I think we'd probably be likely to put a zone in here rather than, because the problem by just putting, the problem first of all, it's better to have zones of interest anyway, because price action is likely to breach and end up somewhere within this area. So if you think of buyers and sellers, some buyers might have their area here, some buyers might have their area here, some buyers might have their area in the middle. So we've got to go down and we've got to wait for price action to eat up all these levels. It'll usually make a range, and then that range is going to act as additional confluence for support or resistance at a later date. So this certainly hasn't had much of a chance. It's had a touch to the top of the zone and a touch to the bottom of the zone. So bottom of this range is signaled by $15. Top of the range signaled by $24, but that's the next level of support where we're likely to get some kind of a sticking point next. And if we do the equal measured move, what we previously mentioned before, equal measured move from here to here, we'll see whether this ties up with any additional confluence. So there's a little level there, so it could come down and push down this level, or alternatively an equal measure move from here to the swing low. See where that takes us. That's more like it, which is taking us to the bottom of the range. It's $15, currently at 30. So if we do get that capitulation, the negative price action, there's a good chance that we can get Axie at these levels here. $14. When you say it out loud, it's really difficult to actually imagine that it can go to that level when you're trading at $166 back in November last year. So you're trading at $166 at those. And you're trading at $30 now, and we're talking at levels of $15. It is hard to imagine, but the charts don't lie, and you do get these equal measured moves. You do get it does move in harmony, and if you take out the fundamentals and you take out the love that you've got for that token itself and the project itself, and you just look at the pure raw data on the price, it's not impossible to go down to these levels, and in the bear markets to do, unfortunately. Right, one more, Moon River. Okay, Moon River's high. Moon River's high was 538, and we're currently trading at $31. So I feel sorry for the people that have been in Moon River and holding it. Still making the lower lows and the lower highs, unfortunately. If we manage to break this level here, I think we are likely to break this level here. We're looking at further downside, and Moon River hasn't got a clue what further downside from here is. So I don't know too much about Moon River. I know that it's a layer 1, and I think it's built on Kusama or something. Don't quote me to hold me to that, but we don't know how far this is going to go down. Dollar cost average in these areas, it's good if you know that the project's going to go. It's good if you've done your research. It's good if you believe in it and you know who the team are. It's good if you've applied your appropriate risk management to it, and your dollar cost average in its zones of support below 50% from its all-time high. You can get this at cheap prices now. You don't want to be going right into it, because like I said, the charts are telling us it can still go lower. Anyway guys, I hope you've enjoyed the video. It's a bit of a long one. I just wanted to go over it. It's bleeding today, it's Sunday. You don't see much crypto analysis on a Sunday. Give us a like, share the video with others, hit the notification bell, have a look at our bear market strategy tutorial. Like I say, we're in 2 and number 3 will be coming out soon. Enjoy your day, guys. Bye.